And now the Chief Executive at Lead Securities joins us on the show to talk us through the market. Basically, here's Dolapo Ashiru. It's always good to have you on the show.
Thanks for having me.
Now, let me pick one of the securities from the equity side of the market now, which we saw the earnings this week, and I'm talking of Forte Oil. Forte Oil did quite well in the preceding quarters. What do you think went wrong in this quarter, the last quarter, the Q3, where we had a good gross earning, we had a fairly good PBT, but when it comes to profit, things turned otherwise?
Forte Oil was hit by heavy tax payment. So you saw the tax increase by about 183%. So we tried to find out why that happened, but we're going to schedule a meeting with the CFO for Forte Oil sometime next week to find out exactly, to give us the details of how it happened. But basically, it's a tax hit. It shouldn't be like that because there are two components of Forte Oil. So they have the Emporium Energy, which owns the Giregu thermal plant in Kogi State, and we have the petroleum marketing.
And but usually that has got a lot of investments in recent times.
It has, but there's also a tax holiday for people for companies that bought into Nigeria Independent Power Plant. So they're supposed to be enjoying a 4 to 5 year tax holiday. So we're trying to find out what exactly happened. If not for the heavy tax incurement, they wouldn't have done so badly in the bottom line.
When you say we are trying to have a meeting with the management of the company, who are you referring
to? Richard analysts from different companies also want to find further clarification on what exactly caused the sudden hike in the tax.
But there was also more sales this time, generally. How come that then translates to some
There were more sales because from the petroleum marketing especially, because, they've increased the price from 87 to 100, and so that also we increased the revenue also. It also had an effect on the cost of sales because the dollar devaluation also affected the cost of sales. It made it higher. But they still make good margin on the petroleum marketing company.
If we take a look at the operating expenses, that also had a marginal decline. Can you talk us through what you think on that?
First of all, the devaluation of the currency also affected them also. But generally, petroleum companies have two major kind of products. Okay, they have the normal refined petroleum product. They also have what they call white products. White products are lubricants, insecticide, engine oil, and similar products, where the margins are always higher with those ones. But the margins are thinner with petroleum, with refined petroleum products. But because the volume they push on a daily basis, it covers up in volume for them. So pressures on FX mainly.
Okay, so we also know that there's a whole lot of, say, cash tied down in so many trades and other receivables. What do you understand by this?
That will come from the power plant,
the subsidiary.
Yeah, because right now, if you generate electricity, they're meant to be paid. So there's a backlog in payments for that also. So they supply generate electricity and give to the discos, but they also have issues in getting the cash for what they supply.
So basically what we've seen from this earnings and for what investors should understand is that, look, this is an investment period for this company, and so it is only funding its subsidiary, and that is why we've seen quite a number of, that explains one of the reasons why we see this kind of results.
Yeah, another issue is also the fact that with the power generation arm, there are also issues around power generation. So they're not generating as much as they could because of the issues concerning Niger Delta, militants, and gas supply.
Okay, so let's look at the projections now. This is just Q4. This result has to do with the Q3, the third quarter, and of course Q3 is just around the corner. What are your thoughts in terms of projections on what this company can do?
Well, I wouldn't expect to see anything major in the fourth quarter, in the full year results. But for example, I don't think there'll be a bigger spike in the tax they are hit with. So ultimately, FO for us is actually a sell. We're thinking that generally that FO is about a 120, 130 naira stock.
It might not be the right time to buy?
It's not the right time to buy FO.
So is it also true that they could be facing some kind of short-term liquidity challenges?
It's possible, especially from the power generation angle.
Dolapo Ashiru is the Chief Executive at Lead Securities, and he's still with us in the studio. And with me right now, we will be looking at the earnings of United Bank for Africa, which also trickled in this week. And of course, that came in as a very, very impressive report. It's in fact gathered the interest of a lot of investors. Now, Dolapo, This is an improved result over the Q2 that was released earlier. What were your thoughts when you first saw those results?
It was an impressive result, and it was according to our forecast. Right. So we saw an uptick in most of the line items. We saw an uptick, for example, in interest income. And there's a story behind that also, because first of all, the interest income in investable securities also went up because of the high interest regime going on. So a lot of treasury bill activities, investing in treasury bills and bonds. So the high interest in the environment. So that's good for them also. Also, net trading income and gain on forex trading also was significant for UBA. So all around was a very, very good result.
So forex trading and of course investments in securities.
Gains on forex trading.
Okay, so with the fact that we now have Travelex, one of these global investors, now selling FX directly to the Bureau de Change operators, do you think this will change things for UBA going forward?
Not really. UBA is a tier 1 bank, and one of the reasons why we're happy with UBA results is that most of the tier 1 banks seem to have been able to be resilient even with a tough regulatory environment. So UBA, companies like UBA, Zenith Bank, GT Bank are banks that we feel that buys in this particular period now. They can't go wrong with them. They're resilient, they're big, they can withstand any headwinds that the economy pushes their way.
So what do we now make of some of those reports that were released last week, the one from Moody's Ratings as well as Arkham Capital in Dubai, that says that some of the banks are not in good shape?
Even CBN has come out to debunk those reports, and we still stand by CBN. In this tough environment now, we the firm believe that tier 1 banks are the way to go. You understand? And most of these, they're tier 2 banks also, but Nigerian banks are resilient enough to absorb any headwinds that come. And CBN has also guaranteed that no matter what happens, no bank will fail in Nigeria. Okay,
so you actually referenced the something that I was going to play back, and of course we'll play that clip now, where the Mrs. Tokunbo Martins of the Central Bank of Nigeria, the Director of Banking Supervision, cleared the air on some of those reports. But I want us to take a listen at that clip again.
7 banks are undercapitalized is absolutely not true. Now, that is not to say that the bank is not having, that the banking sector is not having, is not feeling the headwinds, the economic headwinds, but so is every other jurisdiction. It's not strange. So non-performing loans at 11%, that is not what we need to focus on. What we need to focus on is that, okay, so we have 11% as non-performing loans. Do the banks have the capacity to absorb any losses that would arise from those loans? And the answer is that yes, they do. They have very strong capital buffers. And I think I've said this thing repeatedly. Another thing that's important is that the banks have very huge capacity to generate income. So apart from the capital buffers that they already have, they also have capacity to generate income to also absorb those losses if they do arise. And then the loans are non-performing. Can they reperform? Yes, they will, because the underlying assets are still there and they are good. So I think we should totally dispel or ignore this kind of story. It's not a story that we should take seriously at all. The fact that a country has non-performing loans at a period like this is to be expected, and I don't think that any jurisdiction should be demonized because of it. I mean, if you look at other jurisdictions that are going through the same circumstances that we are going through, they are experiencing the same thing. There are jurisdictions that have NPLs as high as 15% to 35%. Some countries in Europe have NPLs as high as 18%. So what are we talking about here? So I think we need to ignore it entirely.
Okay, that's Mrs. Tokunbo Martins, the Director of Banking Supervision at the Central Bank of Nigeria. Dolapo, you believe everything she said, hook, line, and sinker?
I do.
Okay, so why do we have to believe it? Because we know that right now the industry currently have an NPL of 11%. Yes,
11-12%.
11 to 12%, and it is projected that it is going to either hit that 12% or exceeds 12% by the end of the year. But the likes of UBA have 2.5%. So how do we balance this? How do we marry this up?
Like I said, tier 1 banks seem to have more leeway to absorb any shock, more than tier 2 banks. But that does not mean that tier 2 banks can absorb anything that comes their way also. So generally, like you said also, is the environment. We're in a recession, and there are lots of headwinds in the economy right now. But Nigerian banks still have the wherewithal to come out of this thing. I still think that even though 12% is higher than the 5% given by CBN as the cap, that Nigerian banks can still absorb this thing. Yeah.
So given these all comments that Mrs. Martins just made, what are your expectations from other banks, other Tier 1 banks as well as Tier 2 banks, in terms of their Q3 reports that will be trickling in from next week?
Yeah, we'll see a mixed bag. We see some banks doing marginally better than last quarter, like UBA. We see some banks also probably even making provisions for more bad loans. But all in all, I don't see any bank declaring any major loss. Yeah.
Okay, well, in terms of UBA that has a 2.5% NPL, non-performing loan, and it is expected that by the end of the year they will manage it around this figure. Do you think that's doable with them, with UBA right now?
Yeah, UBA can do, because one thing to understand is that UBA's exposure, many of these banks, for example, about 40% of non-performing loans in the system are for oil and gas companies.
Right.
UBA doesn't have much of an exposure like other banks to that. That's why they have low NPLs. But one thing that UBA has an exposure to is the power sector. But even with that, they've need to contain it and manage it properly.
So now a lot of traders are expecting that there will be low risk assets creation by the fourth quarter of the year. What do you make of that, of the loan deposits to ratio of these banks by that same by the Q4?
Yeah, banks need to generate low rate assets very, very urgently, so to help them also shape up their books. Yeah.
Okay, so in terms of non-interest revenue, which has supported the frail growth that we're seeing in its interest income, what are your thoughts?
Yeah, non-interest revenue is going to help us. And many banks are also moving to e-platforms, which reduces costs for them. Right. So you can see banks like GTB creating a lot of initiatives around electronic banking. That also helps also.
But is that really sustainable at this time?
Yeah, it's sustainable. That's the future. It's digital and mobile banking.
ICT.
Yeah. That's the future of banking.
Okay. Well, given the fact that we have other companies that will be coming up, that will be releasing theirs next, especially the industrial goods, the consumer goods, and all other sectors apart from these major peaks in the market, what do you expect to see next week?
I expect to see consumer goods companies continue to struggle because of FX challenges. I expect the Dangote to post a good result, Dangote Cement. Right. I expect to see a Lafarge, Wapco, and Ashaka also continue with going to have issues concerning FX because of exposure to the foreign denominated loans. Yeah.
All right. Thank you so very much, Dolapo Ashiru, CEO at Lead Securities, for coming on Capital Markets again.